Is everyone hearing me?
Yes, we're hearing you, Carl.
Yes. Hello, everyone. Good evening. Good evening, and welcome to CFA Society Jamaica Capital Markets webinar. My name is Greg Samuels, and I'll be your moderator for this evening's webinar. This evening, we have put together a very esteemed panel of experts who actually practice in the local capital markets. We have from the Financial Services Commission, Miss Karine Blair, and she'll be our keynote speaker. We also have Mr. Carl Townsend from JMMB Group, Miss Sarah Cumming from Scotia Group, and to close off the panel, we have Mr. Dylan Cook, who is who heads up the capital markets business at JN Fund Managers. So, without any further ado, I hand over to Mr. Hugh Miller, who will give us some opening remarks. And then following Hugh Miller, I'll introduce our keynote speaker for this evening's proceedings. Hugh?
All right, thank you, Mr. Moderator, and good evening all. I just want to bring some very brief remarks on behalf of the Advocacy Council for the Caribbean and Latin America. So the Advocacy Council is made up of 13 countries across the Caribbean and Latin America. And during the course of this week and next week, we'll have 13 CFA societies meeting in a manner like this just to deliberate on what is required to move the capital markets to the next frontier. And therefore, I must just say that we're a part of something big. I want to use this opportunity just to touch on three big issues among others that will be under consideration this week and next week. The first issue has to do with what is required for investment banks to just increase the supply of fixed income equity securities in the market to address the current shortage, and also what is the regulator's role in adjusting the regulatory parameters to make the process somewhat easier, of course, without creating any undue risk to the sector. I was just reflecting, about 2 days ago, the government of Jamaica paid out approximately 26 billion, from a maturing bond. But interestingly, they only reissued 10 billion worth of securities. And so this begs the question, where will the pension fund managers, the mutual fund managers, and the retail investors find replacement securities for the extra 16 billion that they were unable to reinvest? So that's one issue. A second issue under consideration this week and next week has to do with how do we bring more investors into the capital markets? And, the other issue is, should we consider revising the accredited investor definition, as we saw that they recently did in the US. Interestingly, in the US, under the new definition, if an investor can demonstrate that they have requisite knowledge of financial products, they can actually participate in the capital markets, even if they don't have a high level of net income or net worth. If you look at the Jamaica situation, for an individual investor to participate in a private placement offering, they must demonstrate that they have net income before tax of 10 million and net worth of 50 million. And I think the last issue I just touch on, because I did say I'm going to be brief, is one of the other issues to be considered this week and next week. How do we further improve the level of integrity in the capital markets through enhanced disclosure to investors? So this way the issuers have a chance to demonstrate that they continue to put investors first. And so I've highlighted three of the many issues that will be considered this week and next week across the 13 countries in Caribbean and Latin America. So all left for me to just conclude by saying that we look forward to the deliberations that we'll be having this evening by the experts with us. And, we hope that at the end of the webinar, we will land on some tangible steps in terms of what is required to move our capital markets to the next frontier. And so with these brief remarks, I just want to hand back over to the moderator. And I look forward to hearing, what will come out of the webinar. And so with that, I say thank you. Mr. Moderator.
Thank you very much, you, for setting the context for this evening's discussion. You mentioned in your opening remarks that the integrity of capital markets. CFA charter holders and CFA candidates who are presently here this evening will know that the integrity of the capital markets is embedded in the CFA Code of Ethics, as well as the Standard of Professional Conduct. In fact, integrity of capital markets is the professional standard number 2, and that speaks to the whole issue of trading and information and practices and so on. And of course, our Code of Ethics number 5 actually says, as CFA charter holders and candidates, we are to promote the integrity of and uphold the rules governing capital markets. And Code of Ethics number 6 says, we are to maintain and improve professionalism, competence, and strive to maintain and improve the competence of other investment professionals. And of course, our CFA Society mission, we have 6 mission points, and the one that is very relevant to what we are doing here is to be the key source of investment knowledge by facilitating the open exchange of information and opinion, and also for us to be the voice or the resident of investment thoughts and cutting edge trends in the local and regional markets. So, Ms. Karine Blair, our keynote speaker. Karine has been a career banker for over 20 years or close to 20 years. The beauty about Karine is that she would have spent time working with the regulator, then she went to work with companies in the front, I would say the origination space, meaning she works with the capital markets at First Global as well as Scotia. So she basically knows what we are going through as market practitioners. And then in recent times, she went back to head up the securities division at the Financial Services Commission. And her current title now is Senior Director Securities. Now, the thing about, and I've worked with Karine, when she was an investment banker, and in recent times as a regulator would have brought many issues to the market. And I'll tell you something, and I'm sure persons who are here who have done deals in recent time will see the difference Karine and our team has made in recent times. I can personally tell you that we're working on a particular transaction and I could call on Karine at any hours of the night. Can you imagine calling a regulator 7, 8, 9, 10 p.m. at night? And when I think I was special, she would say, Greg, you're not the only deal we're working on. So it just goes to show you the difference she has made. And I think that has to do because she had spent time working on this side of the industry, meaning, and so she understands the issues and the urgency, and she knows that investment bankers don't normally sleep. And so she took that practice to the FSC and we are seeing the benefits. So without any further ado, I'll hand over to Ms. Karine Blair, our keynote speaker for this evening's webinar.
Thank you, Greg. I don't know how I'm going to better that introduction, but I'm happy that you told the industry that it is not any preferential treatment. The players call us at varying hours. Good evening, everyone. The focus of my presentation today will be on the current regulatory initiatives around capital markets development. The outline of the presentation is around how the FSC has been facilitating efficient and transparent markets, the regulatory imperative in a developing capital markets, and the current activities that we have been doing around strengthening the regulatory framework. The Financial Services Commission recognizes the importance of the capital markets in Jamaica as a vehicle for economic growth. And as such, a balance between regulation and market development is absolutely necessary and is a major agenda item for both the FSC and the government of Jamaica. So in keeping with this, a number of initiatives are underway to aid the deepening of the capital markets and better regulate the securities industry. One such activity is the listing of GOJ securities on the Jamaica Stock Exchange. The Minister of Finance and the Public Service has established a multi-organizational working group to oversee a financial deepening agenda aimed at exploring various options for expanding the available instruments in the capital markets, as you pointed out recently, with the government issuing less instrument in the market, so there is need for additional instruments in the Jamaican market. Among these initiatives as well is the secondary listing of GOJ securities on the JSE, and the Financial Deepening Working Group is at an advanced stage of finalizing this item. And next agenda item for this initiative is creating transparency in the private debt market. So on January 11, 2021, the Jamaica Stock Exchange launched the JSE Private Market, which facilitates the private listing and trading of securities that are issued in accordance with the FSC guidelines for exempt distribution, and thus far, 2 securities have been listed. We believe that this will provide transparency, greater potential for liquidity, reliable price discovery, seamless transfer of ownership, and it will improve the level of reporting and compliance. There have also been credit rating initiatives for bond offering. What we found over the years is that rating agencies have played a crucial role in the efficient functioning of international fixed income markets. And so the FSC and BOJ collaborated to assess Jamaica's credit ratings infrastructure and have been in dialogue with CARICRIS and the securities industry to identify credit rating initiatives and gaps. And the main advantage, we believe, to the local industry and to local institutions is that CARICRIS has the ability to provide a global, regional, and national rating. The FSC also relaxed the investment limits for pension funds. Currently, the size of the pension fund market as at December 2020 is approximately 663 billion. And based on the recent relaxation of the investment limits, pension funds can be utilized to provide greater financing options to private firms, as well as increased participation in the financial sector's unsecured debt and private equity. This, we believe, can lead to further financial deepening of the economy as more capital can be provided to small and medium-sized enterprises. What are the regulatory imperatives? So we believe that an important part of capital markets and interacting with the clients of our licensee is how the licensee conducts itself. And so in light of the significant growth in the capital markets over the last 5 years and its continued importance to the Jamaican economy, FSC has become increasingly focused on the conduct of our licensees. And so in light of this, we issued market conduct guidelines, which were published January 2020. And we are actually in the process of using those guidelines into legislation. The digital asset framework as well, a digital asset framework was introduced December 2019, and this was done by an advisory. And the FSC continues to explore the regulatory landscape, rather, with a view to refining its or supervisory remit. We are also improving our capital and liquidity requirements for our securities dealer, and as such, and we will be engaging the Jamaica Securities Dealer Association to assist with this improvement in the capital and liquidity requirements. And so the FSC is in the process of reforming its capital and liquidity framework to better identify emerging risks in the financial sector and aligning our capital and liquidity framework with our modern international standards. And how we've been strengthening our resources. With the emergence of new products and services, regulatory resources will also have to be augmented to effectively supervise the expanding market. So what we've done is to merge our teams to ensure that we deepen our relationship with our licensees and try to better understand the products that the licensees are coming to us with and the growth that we see happening in the industry. And while FSC continues to grow, FSC will also seek to reorganize some of its processes to respond to the evolving supervisory framework. What are the changes that we've done to our regulatory framework over the past 2 years? One, we've amended the exempt distribution guidelines. And one of the recent amendments is that we put in place a minimum set of standards around the disclosures in the issuer's information memorandum. We, under the highly rated exemption criteria, we specify a validity period of the credit rating of a security. We also formalize the approved policy and procedures for accredited investor, and we reduce the timeline for the reports to the FSC. FSC can only be effective if we get timely reports from our industry. And so what we've changed as it relates to the report is that the F2, which will come to us 30 days after the initial distribution date, we've changed that for that to be submitted to us 15 days after distribution. And we formalized the F3 report that we were getting, the post distribution report as it relates to the outstanding private credit in the system. So we wanted to be able to track that, and we put that in the exempt distribution guidelines. We are also enhancing our issuers of securities guidelines, and we would have issued to the industry a concept paper regarding this, and we received quite a number of feedback, and we are in the process of reviewing these comments and submissions. What we've introduced in this framework is a three-step process. So we've moved to a pre-FSC registration process, a registration process, and a post-FSC registration process. And what we've done is to create disclosure and introduce the type of communication that can be done during this period. And it is envisioned that the amended guidelines will standardize the level and the nature of issue-related communication in anticipation of a public offer, and this will improve consumer protection and reduce opportunities for market conditioning. Thank you. And I now hand over to the moderator, Gregory, and I'm sure Gregory will have a question and answer session later.
Thank you very much, Karine, for that well thought out and clear presentation and some really good work the FSC has been doing. And as Karine said, we'll have a set a time at least 30 minutes for those in the audience, online audience, to ask questions. And so at this time, I'll introduce the rest of the panelists, who each of them will give their opening remarks, and then after which will be followed by question and answer. So we'll start with Mr. Carl Anthony St. Patrick Townsend. Carl Townsend is the Chief Country Officer of the JMMB Group. Sorry, let me rephrase. The Chief Country Officer of the Group Capital Markets Unit, and which is a part of the JMMB Group. And Carl is a career banker. He started out as a corporate banker and would have done stint at Scotiabank, etc. And now he's a fully fledged investment banker who was brought to JMMB to build out their capital markets. And he has done several transactions amounting to over US 1.1 billion in debt and equity, not only in Jamaica, but also in the Caribbean region. One of the things about Carl, and if I don't mention this, he'll never forgive me. Carl is a proud past student of the St. Jago High School and a former president of their alumni association. So, Carl, given your wealth of experience and what you have heard from Karine in her keynote presentation, what do you think are some of the priorities that the FSC can focus on now, so that will make the practitioners in the capital markets life, more easy? What are some of the quick wins that we could have if, the FSC should implement these priorities now? Over to you, sir.
Thank you, Gregory. And thanks to CFA Society for having me on this panel. I don't know about quick wins per se, because as you know, in the investment banking capital market space, there are a number of things we need to do, and I'm not sure if any of them are necessarily quick, but I would like to approach it from a few different perspectives, sort of a different angle. Whereas we're focused on capital market space in Jamaica, I think it behooves us to widen our scope and look at the capital market as a region, because the truth is that we're not just focused on economic growth for Jamaica, but we're looking to deepen and strengthen and improve economies across the region. And it is the investors, it is the players in the region that are going to, by and large, accept the risks that the region poses and are able to invest in the region. So for me, one of the things I have as top of mind is something that I would like both our FSC and the SEC in Trinidad and the regulators across the region to come together to try and harmonize the securities legislation across the region, so that it would make it easier and more efficient for both issuers to issue debt and equity in a seamless manner, and for investors to invest in those instruments in a seamless manner across the region by understanding and adhering to one set of securities regulations that would work across the region. So just to give you a case in point, when we were doing the APO for JMB Group, as everyone knows, the APO that was done simultaneously in Jamaica and in Trinidad and Tobago. But we had to navigate two sets of regulations. And in Jamaica, of course, we're quite okay with that. In Trinidad, we brought persons on board, we brought our attorneys on board, but you'd be surprised at some of the nuances that make things more difficult, either in this jurisdiction or the next. So, you might get a particular approval in one jurisdiction, and in the other jurisdiction, for the very exact same thing that you're doing, you have to make several changes. And those changes always lead to delays and so on and so forth. So for me, that's one of the things I would like our regulators to focus on. Can we harmonize? Because the truth is that, as recent events have shown us, we are a small region. And, things that affect one jurisdiction end up affecting all of us. One good hurricane, as we saw back in, I think it was 2018, 2019, one good hurricane devastates the entire region. It goes all around. So, who is it that's going to step in to serve and support our issuers and our investors? It is the persons in the region who know the risks and accept those risks. We know these companies, we know the sovereigns, we know the risks that are embedded therein, and we are the ones that are best able to support both the issuers, whether they are corporates or they are sovereigns. And the investors who understand those risks are best able to price those risks in a manner that serves their interests. So for me, that's one of the things that I would love us to look at as a region to harmonize. In as much as Karine spoke about the relaxation of some of the guidelines, BOJ recently relaxed Section 22. There's some relaxation there. There's some relaxation for pension funds. I do believe that we can do more, because with the 663 billion under management, there is a lot more that pension funds can do to support the economies in which we operate, primarily Jamaica. So I think we need to continue to relax those pension and CIS regs to allow pension funds to do more. I mean, as it stands right now, by and large, I think what the relaxation in those regs did was just allowed a lot of those pension funds to actually come in line. A lot of them are probably right up against that limit, or some of them are probably about to breach that limit. So, extending the limit really only allowed them to come in line. It didn't give them a lot more room to do things. And so, we need to continue on that path of continuing to relax in those guidelines so that pension funds can invest in more things, primarily in the private equity space, where, the guidelines are a little bit ambiguous in terms of what constitutes private equity and what constitutes speculative investments and so on and so forth. So that is something else that we need to look at. And another big area that we need to look at that is getting a lot of traction recently is the whole real estate investment trust. So a lot of companies and a lot of entities are setting up real estate holding companies to mirror and mimic real estate investment trusts. But the way that we do them now is very inefficient, because we don't have the trust framework, and therefore we are not really operating as REITs in Jamaica. So these companies are getting taxed, right? So they pay the corporate income tax, and then when they pay out the dividends, those dividends are also taxed. Whereas in a true REIT, there's no corporate income tax. The REIT pays out 90+% of its profits, and it's the dividends that they pay out to their shareholders that get taxed at the applicable rate. So that is something that I think, if we can get that real legislation in place, it unlocks a lot of value, because not only does the sovereign have a lot of real estate locked up that it can't monetize for one reason or the other and would love to do, and that this could be a vehicle to do it. There are a lot of corporates that also have real estate locked up on their balance sheet that they would like to monetize, and if they could find an efficient way to do it, I think you'd see a lot more transactions in that space. And it would make it more efficient so that, as practitioners, we wouldn't have to be getting up to devising these innovative, complex ways of making the thing work. If you had a legislation, then it was fairly straightforward, and we could get that done. The other thing that I think we need to look at in the region is what I call our self-imposed limitations. So these are not limitations by virtue of regulations from FSC or BOJ or other regulators across the region, but it is limitations that we place on ourselves. So you have entities, you have pension funds and other entities that devise an IPS that says they can only invest in investment grade entities. Well, okay, that is quite nice on paper, but we're going to find those investment grade entities across the Caribbean, right? There are very few, if any of them, that are left anymore. And therefore, if you're going to play in this space, if you're going to be an investor and a capital market participant, you need to step back and say, are there corporates in the Caribbean? Are there sovereigns in the Caribbean and Jamaica that we know the risks and we can accept those risks, we can price those risks, and we can manage those risks and make a return on our money? So again, that is something that we need to look at. And interestingly, today in Trinidad, UTC, which is the largest pension fund in the Caribbean, has indicated that they are going to be coming to Jamaica. They're going to build out their capabilities in Jamaica and launch mutual fund in Jamaica. And I think the big reason for that, of course, is they're pretty much tapped out in Trinidad. And I think they've come to the realization that if they're going to continue to grow, they will now have to start investing in non-investment grade assets. Because if you come to Jamaica, certainly, you're not investing in investment grade assets by virtue of the definition of Moody's and S&P and Fitch and so on. It will be investment grade by virtue of a characters on a national scale. But I think they've come to that realization that they have to play in this space, and you have to accept that the Caribbean is a unique animal, but it's an animal that we understand. And that over time, if you look at the history of, I would say, losses, it's been very low because we understand those risks and we can accept them and we can manage them and we can price them very well. So that, again, the self-imposed limitation is something that we think, that we need to look at. There's always room to improve, legislation and improve regulation. And I know that the FSC some years ago would have done a comprehensive look. I think somewhere in 2012, 2013 would have done a comprehensive look at the old securities regs. But I think it is time again for another comprehensive look, so that what we don't end up with is kind of where we're going now, where we are doing the thing in a piecemeal fashion. Granted, there are certain things that need to be done and need to be done quickly, and therefore possibly can't be done in any other way. But I think that the time has come for us to sit down and look holistically at the regulations that we have, look at what obtains in our neighbors to the north, take the best of those regulations from our neighbors to the north, cut it to fit our own situation, and have a comprehensive rejig and relook on our own securities regulation so that it suits us and it suits our purposes, and it can take us into the future in terms of where we want to be, rather than the kind of piecemeal approach that we've been doing. Granted, there are exigencies that cause us to do that, but I think a holistic approach is going to serve us much better. So for me, those are, I guess, would be the four overarching themes that I would like, as a securities industry, for us to focus on to take us forward.
Well said, Carl. Now you see why JMMB would have brought him to build out their cap markets. And while these are not quick wins, they certainly will move our cap markets ahead. So I ask you for 3 priorities. You gave me harmonization of capital markets regionally. You also said that the FSC should look at relaxing the regulation for pension funds so that they can invest and do more. You also want them to look at the REIT setup where there's a trust framework so that you can have tax efficient movement of asset between the trusts. And of course, you spoke of self-imposed regulation. And by the way, Carl, under the CARICRIS rating system, you'll have a lot of investment grade, given that the benchmark is actually Trinidad. So while you may not have a lot of S&P and Moody's investment grade, if any, in the Caribbean, certainly under CARICRIS will have a lot. Thanks again,
Well,
Carl.
but just to add to that, so the issue with that, though, Greg, is that some of the IPSs, the way they're written, the standard that they use is Moody's and Fitch and S&P, and therefore, once you use that standard, well, who qualifies?
All right. Thanks again, and we'll have more discussion on these topics that you raised in the question and answer. I'll now move to Miss Sarah Cummings. Sorry, Mrs. Sarah Cumming, no S, Cumming. And Sarah is the head or the vice president of capital markets at Scotia Bank. And Sarah is also a career banker with over 10 years in international corporate and investment banking. She would have done stint at CIBC and also at Citibank. And Sarah is going to give us her opening remarks. And Sarah, I just want you to frame your remarks along the lines of, based on international trends, what are some of the things that we locally and regionally need to pay attention to? And you can frame your remarks in the form of affordable capital, deployment of short and long-term savings, as well as efficient resource allocation. Over to you, Sarah.
Okay. Hi, everyone. Thank you. Thank you for having me this evening. In terms of my perspective on how capital markets can move to the next frontier and how we can look at deepening, I first thought that we should do an assessment or a diagnosis of where we are. And one of the questions that I asked was, when we think about the development of our capital markets, do we think that our capital markets delivers high quality pricing information? We haven't touched on this yet, but the price discovery and price transparency is very critical in terms of the maturing in our capital markets. And as an arranger, for example, on the equities side, I believe we do have transparent pricing because I have public information through the stock exchange. However, as most of us know, many of the debt issues are private issues, and so there really isn't a public yield curve. Karine touched on the steps that are being made in terms of the private placement market that has been launched on JSE, and that there's 2 listings there. There is also an industry corporate yield curve. But as an arranger, what I've found is that it's not necessarily reliable or an accurate yield curve. Amongst the brokers, they may use this yield curve in terms of an asset allocation if they want to qualify it as a liquid asset. But for the most part, they don't use the pricer in this corporate yield curve that is circulated. And so from this perspective, I think we're still at an infancy stage around price quotation for our corporate papers. And so I think how we can improve that is obviously through greater participation from our broker communities in terms of being able to put forward their bids. As I said, right now, this is done via an Excel. What I've heard is that there should be a platform. We could look to be moving a platform. Obviously, something in the form of Bloomberg or moving to a JSDA, where we are quoting on these local bonds so that we can get some price discovery. I mean, obviously, with a lot of the private placements, when we look at who it's targeted to with accredited investors, you may find that, again, with our pension funds, when I speak with them, they don't necessarily trade in these assets. They invest from a hold to maturity perspective. So it's often difficult to get true price discovery from them. So an opportunity does exist with us as arrangers to see how we can facilitate certain either public aspects to issues that we do, or like Hugh touched on, is there some modification that can be done to the accredited investors? I do believe the reform that was made, I think it was last year, September 2020, for deposit taking institutions, whereby they can now look at, for their liquidity and capital management, look at high quality liquid assets, and they can use corporate bonds that are investment grade, traded and listed for their capital ratios. I think that has served to deepen in terms of our scale and who we can distribute to. Certainly within Scotia, I've seen where that change has certainly affected who I can sell to internally in terms of the bank looking at participating in our issues. You know, but I do think that reform could go even further, and Karine touched on it in terms of how the capital and liquidity requirements or the framework can be modified for our securities dealers, right? Because in terms of their capital adequacy ratio, there's no differentiation in terms of what they would consider to be a high quality liquid asset. So I look forward to that reform, because at the end of the day, it's really our brokers and securities dealers that are going to become market makers and be able to facilitate and give us that greater price discovery, so that ultimately from our capital markets, we can be more efficient in our resource allocation. Another thing, you know, in terms of the tradability, so the feedback that I've had from brokers is around settlement, right? So yes, this private market that JSE has launched has given some transparency, but we don't quite have a solution in terms of a DVP where there is a delivery versus payment or electronic means for transferring ownership of these securities. My understanding is that this does take, you know, days in some instances, where certainly for our traders who are trading in global bonds, they are able to do the settlement of their trades DVP and can settle in a day. So that's something, again, to the extent we want to start getting more trading happening in these private issues and our issues in general, how can we reduce the manualness of how we trade as well and move to an electronic platform? I agree with the comments around a regional registration, so to speak, where we do see our regional regulators getting together and harmonizing or coming to some consensus about what the characteristics of a regional registration looks like. As Carl mentioned, there's tremendous amount of value, I think, that can be leveraged in terms of scale. We have seen big scale of transactions in Jamaica, but as you know, there could be concentration limits that prevent an issuer from maybe going back to the market. You know, we're seeing, certainly at Scotia, where we have a Trinidad desk, I'm seeing a lot of inquiries around potential cross-listing, where Trinidadian issuers are looking to come to Jamaica to take advantage of our liquid environment, to see certainly on the equity side, we trade at higher PE multiples. So they're seeing where there could be additional advantage for shareholders. So I echo Carl's sentiments in terms of looking at an opportunity for some kind of regional registration to further enhance the scale of the capital markets. And then the other question I asked myself was around, do our capital markets provide attractive and diverse short and long-term domestic options? And I think that we've done a very good job here. I think, having looked at the instruments that we've issued in our capital markets, there is a range of investment opportunities. Although to Hugh's point, maybe they're not in the sufficient volume, but I certainly think from a diversification perspective, we are running a full spectrum of possible tenors. I mean, we've certainly seen tenors from as low as, you know, commercial paper to 40 years. We've seen even a perpetual preference shares. So I think that as an industry, we are very creative in terms of bringing forward diverse investment opportunities. But I think the point around what Carl mentioned about, you know, certain internal investment guidelines that you may have may create limitations on the capital that can be unlocked to take up these issues. So I do agree with the point around, you know, getting more issues rated, and that's certainly a trend that we're seeing now. I would look at my pipeline and I would say certainly any issuer looking to raise in excess of $1 billion it's a valid consideration for them to look at getting a carry risk rating. That being said, I know that for a lot of pension fund managers or portfolio managers, they don't take the carry risk rating at face value. They do their own internal assessment. They may use it as something that say, okay, it's investable, but they're going to do their own due diligence. So on that point, you know, whilst Karine, a reform that has come about is the standardization of the information that needs to go for exempt distributions. When I speak to certain you know, traders, it's the access to that information. So if you think about the secondary market or the private placement portal that the JSE has, what kind of disclosures are made during the life of that issue, right? So, you know, at the primary issuance, yes, but can this information be made available to a trader who is going on and maybe seeing the listing and may want to trade, but they want to, you know, have access to the information. What I've heard is that getting access to information to make an investment decision is sometimes difficult on a secondary trade. So it takes some time. So that's my view in terms of some opportunities that I see that can exist for taking us to the next level. I think certainly around price discovery and transparency, you know, there is a need there for us to evolve. My understanding is that when we think about our GOJ local bonds, that's exactly how it started. It started with an Excel sheet with brokers putting in their quotes, eventually moved to the JSDA, and then eventually now we're on Bloomberg. So, you know, when we look at the criteria, it's not just investment grade. We want to make sure that these things are tradable and liquid assets, are assets that can be pledged to BOJ. So I think that work is the next frontier for us to further deepen and mature our capital market space.
Wow, well said, Sarah. I think you highlighted about 5 or 6 issues that we pay attention to. Yield curve, pricing and efficiency, along with price discovery. You spoke about the new development by the FSC to include corporate paper rated by carry risk to qualify as high quality liquid assets. So, you know, brokers and companies can use these to lower their capital charge, as well as to back repo for those who still have a repo book. You mentioned that there's a need to implement a proper settlement system. We currently use, you know, manual over-the-counter type settlement. We need to come up the curve and do a DVP, similar to how we trade global bonds. You also spoke about having a regional registration, you know, piggybacking on what Carl mentioned around harmonization across the markets in the Caribbean. And of course, one of the things I like that we are doing good is the range of tenors of instrument all the way up to 40 years, even though we could do a little more on the long dated instrument, so that pension fund can, you know, immunize their portfolio properly. And of course, access to information. You said after the primary issue, secondary trading activity, limited information for traders to trade. So a lot to think of, food for thought. And of course, we'll have more in our Q&A segment immediately preceding this, well, following this segment. Our final panelist is Mr. Dylan Cook. Some people call him Dylan Cook. who is an investment banker. Some persons say he's a legal investment banker. Why is that? Dylan has spent 8 years practicing as an attorney covering commercial litigation and general legal matters. And then he made a switch into banking, where he spent 15 years in investment banking at leading franchise houses, meaning he was instrumental at NCB Capital Markets in building out that space. Then he left, went to Scotia to continue the build out there, and now he's currently at Jane Fund Managers, where he heads up the capital markets business along with other things. So Dylan, having such a wide experience, combined over 23 years, you've heard from Karine, you've heard from the other panelists. What are 3 major issues in the capital markets that you think the FSC, along with other regulators, should focus on? And bear in mind, Carl would have touched on it, the restriction and limitation around USD issues and pension issues and regs. Over to you, sir.
So thank you very much for that kind introduction, Gregory. I just wanted to take a minute to big up Karine Blair again. Karine and her team have done a phenomenal job in recent times, and I think all of us who operate in that space have felt the difference and seen the difference in terms of the responsiveness, in terms of looking at the regs, in terms of giving guidance on various issues. So big up to Karine. So Sarah and Carl have already taken all the good points. So I'm just going to focus on 2 things. As Gregory pointed out, I've been in this business for a little while now. And in thinking about today's webinar, it occurred to me that the capital market space and the investment banking business in Jamaica has really come a long way. So when I entered this space, people genuinely had questions about, should we be building out a team to do capital markets? Is there sufficient deal flow to keep people employed in this space? Can we even give these guys a target? Will they have enough to keep them occupied? Big up to Chris Williams for having the vision to build out the team initially at NCB Capital Markets. But what I've lived to see is 15 years later, where it's a tremendously dynamic and exciting space. There are sophisticated issuers, there are sophisticated investors doing all kinds of deals. So Cygnus is not happy unless they come with something new pretty much every month or every quarter. My good friend Carl Townsend probably doesn't get out of bed for any deal less than 10 billion at this point in time. So very dynamic space, very deep, big deals. A lot of people who now have expertise in that space. I'm just looking at the list of persons who have logged on this evening. And there are a lot of experienced investment bankers in the space. I'm seeing Luana, I'm seeing April, who is a rising star at NCB Cap. So lots of expertise, I think there's a critical mass in Jamaica. And what I wanted us to do this evening was to look to the future. So we've come a very long way, but where do we want our industry to go in the medium to long term? And what I would love to see, and I think both Sarah and Carl touched on it already, is I would love to see Jamaica become the hub for regional capital markets activity. So we have sophisticated investors, we have sophisticated investment bankers, we have the really experienced lawyers who help to structure the transactions. We have all of that expertise to support the business. To me, the next obvious level would be for us to create a regional business where there's more deal flow, there's greater scale. Putting these transactions out become even more efficient. Now, there's some obvious challenges there, which Carl and Sarah would have touched on in terms of different regulatory frameworks in different territories. But I know Karine is going to jump on that immediately. So we're anticipating a solution. There are other issues around moving hard currency across the region and that kind of thing. But I really feel as if that is the next step for our business. And I'm not just looking at it as, oh, we want to harmonize the thing. I want us to harmonize the thing, but I want Jamaica to be the center of that space. Yeah, I want us to have a real investment banking industry based in Jamaica, but with a strong regional focus. So what I'm encouraging Sarah and Carl and Karine and Gregory to do, as well as all the really bright people in the webinar today, is to start thinking about how do we evolve to that next level? What are the things we can do? You know, what are the easy wins? But also, what are some of the big transformative things that we need to take on as projects and push them through in order to help us get there? So that for me is the major point I wanted to make this evening. The other thing I wanted to touch on, which again Carl had touched on earlier, was we would have seen helpful amendments, especially to the pension fund regs in recent times around things like unsecured debt and investing in private equity. But I do wonder if those changes have had the effect that we intended or that was intended, or if it has had the effect to the level that we would have hoped. Has it unlocked the amount of investment that we would have hoped? And that is not me knocking anybody. That's just me asking the question and wondering whether we might not want to take a moment to reflect on the amendments that have been made and maybe ask ourselves whether further tweaking can be done to make them more effective. Right? I don't put it any higher than that. And those are my two quick points. So as I said, what I want us to do is to dream about what's the next level for the business that we're in. So thank you.
Thank you very much, Dylan. You said two, but you actually made more than 2 points, sir. First, it took us, give us a trip down memory lane, how it all started. And you're right, a lot of companies wonder whether or not they should, build out a capital markets or to just keep it within the corporate banking ambit. And of course, you tell us the vision that you have, your medium to long-term vision, for Jamaica to be the hub of the regional capital markets, given that Jamaica already boasts all the expertise, from legal to structuring to settlement, placement, etc. You mentioned that one restriction could be how hard currency flow, and we know the issues, the EC Islands, Trinidad have their issued US dollar, Barbados, fixed currency. So that's something that we'd have to find some solutions around. And of course, you want us as practitioners here on the webinar to think about the next big thing, how do the capital markets evolve, going forward. And the final point you made was around the recent pension regs amendment and the question you asked, which is very relevant. So far, has it achieved its intended effect or its objective? So before we go into our Q&A segment, because that's the segment which is next on the agenda, I want you to think about the question you want to ask. You can ask a question by doing two things. You can indicate by raising your hand on the platform, or you can write the question in the chat, and we'll have somebody there to take these questions. But before you think about what you want to ask, we're going to do a poll. John, are you ready? So this poll is very short, so we'll give you some time to think about the questions while answering the poll. And when that is through, then we'll open the forum for questions. So John, are you ready? Use the question popping up so you guys can answer. You guys are through, I need some more time.
Greg, I'm seeing 23 of 44 participants just now, which is 52%. So I'm kindly asking everybody if they can just participate. We can give them a few more seconds. Really appreciate the feedback.
Okay. So I'll do much better. I'll do one better. I'll give you a few more minutes instead of seconds, all right?
Thanks, Greg.
Yeah, I think we're at about 62% now. I'm not sure, some persons may have stepped away from their
Okay, Greg, the poll is closed now. Thanks to everyone who participated. Thank you so much.
Okay, great. So the floor is open for the exciting Q&A segment where you get a chance to pick the brains of our esteemed panelists and keynote speaker. I see hands are going up. We'll start with Damian Brown. So Damian, can you unmute your mic and go ahead and pose your question, sir?
Thank you very much, Chair, and good evening to the panelists and all the participants. My question is that as part of capital markets, generally early part of the development is securitization, whether it's mortgage-backed securities, auto loans, credit card receivables, personal loans, but we haven't seen that really come across in the regional capital markets. Would any of your panelists want to speak to what has been the major constraint or why they consider it may not be as applicable for our region?
Who wants to take that, Dylan or Carl? I mean, I've known there are one-off securitization which should have taken place, but you're right, there hasn't been a lot. And but I'm not sure if Carl or Dylan want to speak on.
Sure. So I don't know if I have a good answer, Gregory. As you rightly say, some of it has been done. I know of instances where pools of mortgages have been securitized. I know in my career, I have pitched securitization deals more than once, but for various reasons, they haven't gotten traction. But I honestly don't know that I can give you a good single reason as to why we haven't gone there in a more significant way. I don't know if Carl has thoughts on it.
I don't think I have a good handle as to why not. I think when I think about it, and like you have, I pitched these solutions to various entities at various times. I know of a few that have been done. But I think when you think of securitization, persons are using them to raise liquidity, to monetize the assets that they have on balance sheet as a means of getting liquidity to do more. And it doesn't seem to me that the entities, certainly in Jamaica, view this as a way to get liquidity to fund their business. And those are primarily, if you're talking receivables, if you're talking credit card receivables, those are primarily the banks and they have deposits. So I guess not a big thing for them. If you're talking mortgage companies, again, they might have deposits or other means of funding themselves. And if even some of the statutory organizations, for instance, would have means of funding themselves so that they don't necessarily need to do a transaction like that. Now, that said, what I can say is that in recent times, certainly within the last 3 to 6 months, I have been in discussions with various entities who are actually now thinking of doing some of these transactions for various reasons. Some of these are state or quasi-state entities. And of course, as the government steps back from providing wholesale funding to some of these entities, they know to start thinking creatively as to how do they fund themselves going forward. And so this has not come up on the agenda in terms of securitizing the assets that they have on balance sheet. So I think as you look towards the future, I would say that I think you're going to see some of these transactions coming to market, certainly in the next 3 out to about the next 3 to 12 months. I think you're going to see some of these because entities have now started to think about how do I fund myself, given that the government has stepped back from that role.
Yeah, no, very, very, very good observation, Carl. And what I'll say as well, Damon, is that products like securitization, as Carl said, normally companies use this as a way of raising liquidity or to monetize assets. And these products are normally a function of how advanced the market is. Our market, as Sierra would have pointed out, we are still developing. And for us to reach the stage where we have securitized bonds trading, we first have to start trading our corporate bonds first. We are primarily a buy and hold type market, pension fund hardly trade. The brokers basically most times the back-to-back stuff, they don't really have inventory to trade. And so I think maybe we should look at what regulators like FSC and the JCSD, etc., can do to improve secondary market trading. And Sarah would have mentioned some of the challenges we have with that in terms of pricing and no harmony around price discovery and yield curve, etc. But yeah, so for us to start trading secure, mortgage back and credit cards and auto loans products, I think we should get to the stage where we can see more secondary trading taking place between brokers,
Yeah. I think also as well, not to belabor the point, but I think also that the entities that hold these assets will also have to get to the place where they are comfortable in reducing their balance sheet by securitizing and selling off these assets and going again. And that also, I think, has been one of the constraining factors why we haven't seen more of these type of transactions.
Okay. I'm trying to see if any more hands are up. Karen, is there any question in the chat that was written out that you could read for us?
Hi, Greg. No questions in the chat. Let me check to see if I see any hands up.
Well, I have some shy persons on.
Seems that way.
I know the panel is good, but not that good that we do have a few questions for them, you know. All right, let me ask a question until, you know, the guys have their evening coffee. So Karine, and from your standpoint, one of the recent development we would have seen in capital markets is what we call SPAC, which is a special purpose acquisition company or vehicle, where basically these are companies that are listed primarily to fund acquisition. So, you know, let's say a company wants to buy, you know, Grace Kennedy, for argument's sake, a group of brokers, you know, Carl and Dylan and Sarah will come together and said, look, we're going to list an entity, a SPV, for the sole purpose of raising the money to buy Grace company. So at the end of the day, the SPAC basically own the companies, and whoever invests in the SPAC could be anybody from retail or funds. And that has been a trend that is very active in the US, especially. We have seen a lot of acquisitions taking place, and this is a very I was on mute all this time.
No, just the last
Just now.
10 seconds.
Yeah.
So Karine, do you see a space? I'm sorry, there's nobody from the JC here, but as a regulator, do you see a space for that, for these type of vehicles to be listed? And I guess the panelists could chime in here, as you know, because you guys would have done a lot of IPOs and APOs type of listing, but do you see a space for this type of product?
The premise of the securities regulation is around whether the instrument is a security, right? And so if the instrument meets the Howey test, then how do we then register that whatever security is being placed on the exchange or you intend, and then the entity would meet the requirements of the Companies Act. And so once that's done, then our regulation is based on full disclosure around what this entity will be doing. And so once those issues are met, once we are able to identify who are the sponsors of this company, setting up this company, and the KYC information is known, the investors know exactly what they are getting into, then once those principles around the securities regulations are met, I think at a broad level, there should not be anything that will prohibit a legal entity that meets the requirements of the Securities Act and Issuers Guidelines and the Companies Act to list on exchange. Because it's important that investors fully understand what the entity is all about.
Okay.
And so they then understand the risk associated with that entity.
Okay. Dylan, Carl, any thoughts?
Yeah, I mean, I think that maybe at some point down the road, if we're going to have one of those things, you know, in the Caribbean space, obviously, we were very involved in one because, as you know, Jamie B and Sagicor, it was actually a SPAC that started that transaction, and that's how we got involved eventually and did that. And there are more and more of them. So if it's not, it is the case that, you know, someone could come around, you know, having identified suitable targets in the region with the backing of, you know, PE firm or some other large group that sets out to do something like that. And, you know, to Karin's point, I think, you know, once the prospectus is properly formulated, you know, the risks are fully disclosed and persons understand what they're getting into. I see no reason why, you know, we shouldn't be able to do one or two of those. We do have the expertise of putting these things together. So, you know, I don't see any reason why we couldn't do it. One of the things I would like to ask Karin, because then there's also this other trend in the US market, where since you touched on it, where the New York Stock Exchange has actually approved listings, direct listings. So these are listings without broker involvement, where the company to be listed does everything between themselves and their attorney. And, you know, they don't get a broker involved and they go direct to market and so on. I don't know what to start with the panelists and Karin and that trend, because, you know, things have a way of, once they happen in the US market, in some way, shape, or form, tend to filter down to our market. And I don't know, just putting it out there for thoughts, you know, Dylan, Sarah, Karin, and anyone else out there in cyberspace.
Yeah. So on the SPAC phenomenon, Gregory, I could definitely see it happening here. It can serve a very useful purpose, because if what you do is create a vehicle which is listed, the fact that the vehicle is listed means you have a easily traded security which you can sell to your potential investors, and you can do that and have your vehicle set up and funded even before you crystallize the acquisition of the target. I expect the question that Karin would have and potential investors would have is, how much transparency are you going to bring to that process? Is it going to be a situation where you're raising money basically on the strength of the sponsors and not giving a lot of detail around what you intend to acquire, in which case investors will need to be very aware of the risks involved? Or is it a situation where you are much more forthcoming about what the target of the acquisition target of your SPAC is going to be? So I think those will be the questions, but to me, in some ways it's a no-brainer. I would bet money that something along that lines happens pretty soon. If Carl not planning one, then I bet you Sarah is planning one, or you, Greg, have something up your sleeve. So it's bound to happen.
That's why you asked the question.
All right, Sarah, any thoughts?
So, I mean, I guess what's interesting was the direct listing. I mean, I won't comment on the SPAC, but it is an interesting concept. I mean, certainly what I've seen locally, and I'm sure on the IB side, you guys may experience it, is in my career, a tightening of the fees that we're able to charge as arrangers and structurals. So as much as we're sophisticated and I think we're more experienced, I think we've seen the issuers themselves, as you said, become more sophisticated. You've seen some of the blue chip entities invest in building out their own M&A teams, right? Recruiting seasoned bankers, etc. So it's that old age, you know, thing about brokers, right? And the value that brokers bring. And if you look at the value of any broker, a lot of it is around information, right? I pay you because you bring information that I don't have, right? And so I think that, I mean, I don't know if we'll get to a direct listing, but I certainly think that in our space, the value proposition of the arranger is changing. It demands more from us as issuers have become more experienced. As I said, they know the lawyers who they can work with. You know, they're more experienced. So our value proposition does have to change. And as I said, I think in the broker world, you know, it is about, you know, as you said, the information, what data can you bring? And I mean, not to harp on the point, I think, you know, that's where us as market makers can add value, right? if you get too plain vanilla, if it's too safe, if the issuer knows how to, knows the CARICRIS rating, I said the value that you bring, diminishes, and maybe, as I said, the value what you can charge for the service that you bring also diminishes. So it is interesting in terms of what's happening in the US. But it behooves us as again, the broker and arranger community to think about how our value proposition to issuers will evolve.
No, that's great. And Dylan, you raise an important part around disclosure, because there are some SPAC where you at some point you'll say, okay, this is a particular entity that we're going to acquire. You can have a SPAC that is set up to do a series of acquisition, and there's a timeline as to which this has to happen, otherwise you have to return the money. But if you think about it, the SPAC is really a sophisticated crowdfunding approach, because what it does, it allows everybody to participate, or multiple persons to participate. There's also ease of exit. So if you don't want to be part, you can, sell your shares. So it's really a phenomenon that is taking up a storm in the US. And as you guys say, it's just a matter of time for us to get on board, because you could see the benefits of stuff like that, rather, clients have to now rely on banks to give them a bridge and then do a long-term takeout. The SPAC is there, Okay, so I'm scanning through to see if there's any more questions. Mr. Miller, is your hand up, sir?
Greg?
Brian?
Yes. Night, everybody. Greg, this question is pretty much for the panel of esteemed arrangers as well as the regulator. As a practitioner, I come to realize, especially during the pandemic last year, that bond trustees play a critical role on behalf of the investors after the closing of those fancy deals. And this includes following up with, say, arrangers for compliance certificate, monitoring financial covenants, following up with them for financial statements and those things. The thing is that the trustee is usually hired by the arrangers. And, if I may say, usually the lowest cost provider. But given the role that the trustees play in the capital markets, I just wanted to know what are the arrangers and the regulators doing to hold bond trustees accountable for service standards, because they're playing a key role for the investors.
As it relates to the FSC, for us, we see our approach there is to hold the issuer accountable, because the trustee is providing a service for the issuer. So that is one of the areas that we are in the next phase of our amendments, especially it's clear in the regulations for issuers to provide regular financial statements. And so we want to put in our guidelines to make it very clear that the issuer has a responsibility to provide the information, and the failure of the trustee to deliver that service is a failure of the issuer. That is our approach to that matter.
Anybody want to comment? Sarah, Dylan, Carl? I like that approach, Karine, take some heat off the arrangers, yeah? The issuer is ultimately responsible. But I think, Brian, the truth is, and I know you don't want to call any name, but it seemed to me that there's a particular trustee that seemed to get the bulk of the business. And so maybe they are comfortable, maybe because they have the technology and the resources to demat or whatever, whereas the other players are not so built out. So maybe it's an opportunity for persons on this webinar to convince their companies to get into this business, because as you can see, the investors are not so happy with the current trustee who seem to get the bulk of these business, you know. I don't know if any other panelists want to comment.
Yeah, well, certainly it is a sentiment that we reflected to all trustees and that particular trustee, to which you make inference, that, you know, they do need to improve their customer service standards, and they do need to increase their talent pool so that they can provide a better service to their bondholders, you know, because they act on behalf of the issuers, you know, as everyone rightly pointed out. But the truth is that as arrangers, we can only provide the feedback. You know, we can't force them so to do, but we provide a constant feedback through many different channels, and we're hoping that over time, you know, they will improve. Now, that said, you know, the trustee business, I think the reason why more persons are not in it is because the trustee business has some regulatory and legal requirements around it. So not everyone can just jump up to be a trustee. You know, there are certain things that you need to do. There's some legal requirements. There's some bonding requirements, because trustees do have certain kind of duties. So I don't think it's a very attractive business for many people.
I think there's a lot of operational risk in the business as well. I mean, I think we all read about, you know, what happened to Citibank last year, you know, so you're right. I think that it requires, though, you know, it's not a business that you find you can just jump and get into, because you really have to appreciate the responsibilities that you're taking on. So I think, you know, my approach when working with trustees, you know, is really not, I mean, there's always a trust deed, certainly when we're looking at, you know, bond placements. I mean, I very much, you know, in a path, to the extent possible, try to work with the trustee and ensure that they actually read the trust deed. Sometimes I find that, you know, these trust deeds may be published and the protocol is, you know, send it to legal and let legal review. And if they're okay with what legal has to say, then they're okay to sign. And so I think that there's, you know, as you said, that responsibility. I agree with Karine that it's ultimately for the issuer. So as an arranger, part of what we do as well is, when looking at these things, especially when they're new to the capital markets, is making sure that they do understand these responsibilities. I mean, there is a financial readiness when coming to the capital markets that certainly, you know, if you have enjoyed banking relationships previously, you know, it's more of a relationship management. Oh, you're late delivering your finance. Oh, no big deal. Or you breach this, I can issue a waiver. You know, so I really try to do a lot of the, you know, education around with my issuer in terms of it kind of being a new protocol and the kind of responsibility you have, yes, to the trustee and to your investors. So it's a little bit more of a formal relationship as opposed to maybe what they enjoyed on the banking side.
Yeah. I think, Brian, that one of the things that we can do and should do, to your point, is probably convene some kind of meeting between the trustees that operate in this space, the brokerage houses like ourselves, and asset managers like yourself, so that we can have a frank and open discussion about the challenges that asset managers are facing and the kind of improvements that they would like to see, not just from trustees, but I'm sure, you know, you might have one or two things that you'd like arrangers to do as well. We can get attorneys involved. So it's not beyond us to convene a meeting like that, to, you know, to try and thrash out the issues and hopefully, you know, lead to a resolution and an improvement in service going forward.
Okay.
And I think also the FSC can only be fully aware of the issues when we get formal complaints to act on. So I think the industry should also get in the habit to, you know, to provide us information in a formal way and that we can act on, because just having these discussion, by the way, we do not have sufficient information to act on and to discuss with the issuers or the trustee what really are the issues that bondholders are experiencing.
Is Fiona Hyman online? I saw she post something in the chat around rating. I'm not sure if she want to make her point clearer to the panel. Fiona Hyman.
Good evening, everyone. I think the only point I was making with that, with most of the banking regulators across the region now moving to Basel II, Basel III, how they assess assets will change. And the basis of that standard is that you may get a lower risk weight requirement if you invest in, say, instruments that have a credit rating. That's the only point I was making.
Okay. Yeah, no, that's a very interesting point. By the way, guys, and to the panelists, what are your views on CARICRIS? Because I've heard mixed reviews. I mean, it's not the S&P or Moody's, but it certainly plays its role. So, you know, if you could, you know, give your comments on the role CARICRIS is playing, and, you know, what sort of improvement, if any, do you think we can, you know, challenge them to make? Anybody?
Dylan, you can go first.
All right, so how should I respond? So I would say that CARICRIS and the services they provide are very welcome. It is a tremendous innovation in the market, well, for us. And obviously it adds a feature to the market that had been missing, an independent rating agency providing their feedback and assessment of debt issues, which investors can rely on and use as a quick guide to the creditworthiness of the issuer. I think as they go along and do more and more ratings, obviously they will build up additional scale and expertise. I think from my perspective, I would prefer if the rating process were a bit quicker. As arrangers, we know that the process of structuring any private placement or any offer of any kind can be very lengthy by itself. When you layer on top of that a rating process that needs to run parallel to that, and you need to figure out a way to make sure that it runs parallel and the timing of that lines up with the timing of the underlying deal, it can be challenging. So I would love if that process could move more quickly, but I'm sure that as time goes on, you know, the speed and efficiency will improve.
Okay. Carl, Sarah?
Yeah, no, I mean, I think so far CARICRIS has been doing, you know, a wonderful job. They have been operating in the Trinidad market for a much longer time than in Jamaican market, and of course, quite recently, they would have set up offices in Jamaica. I think part of that is, of course, they've seen the demand, and the other side of that, they've seen that the regulations now call for them to be more deeply involved. I think what I would say is that, you know, and like you have heard, you know, kind of mixed reactions. Sometimes you do hear some kind of, you know, skepticism, you know, about the ratings that come out of CARICRIS from various players. But I think at the end of the day, it's something that is needed to drive our capital markets forward. I mean, what I would love to see is that persons become more confident in the ratings from CARICRIS to the same extent that they would a rating from a Moody's or a Fitch or S&P, because what that does is makes the market more efficient and allows you to do things much quicker. So case in point, you know, if, you know, I think someone mentioned earlier in the discussion that even when CARICRIS puts out a rating, you know, the asset managers are still going to go and do a whole full due diligence end to end to satisfy themselves. And to me, that's kind of a duplication of effort, and it slows down the process. So, you know, whereas in the US market, for instance, when an issue comes to market, those things, they're normally come to market, priced and settled within 1 to 2 weeks. You know, in our market, you know, send out the OM and, you know, it could take anywhere between 3 weeks to 8 weeks for asset managers to make a decision whether or not to participate. That's not an efficient process. And that is something that if we are going to drive our capital markets forward, we have to get to the point where there is some belief, there's some confidence in ratings. We can move much quicker, you know, we can do things much faster. It's not efficient to have an issue in the market dragging on for 4 weeks, 5 weeks, 6 weeks, and persons still can't make up their mind. Whereas in other markets, these things, you know, turn around very quickly, because I think in those markets, people are a lot more confident and they can get to a decision very quickly. So I think, you know, overall, on a balanced view, I think so far so good. And to Dylan's point, I think they're only going to get better as they start doing more and they, you know, get more acclimatized to the unique conditions of the various markets. So, and I think they just need to continue doing that and getting better.
No, that's true. And Carl, you raised a very important point, because at the end of the day, we need to respect the rating as practitioners, and I'm speaking specifically to investors as well, because the rating agent, the due diligence that the rating agency does, no investor would have access to those information all the time. When rating, well, Carl, you have been part, and Dylan and Sarah, the rating process is very detailed. These guys come in and they dig up your house, minutes of meetings, everything, policies, procedures, they examine, they go and meet with sometimes your clients, everything, key persons. Investors don't have no time for that. And what we have to understand as well is that the CARICRIS, just like the S&P, the ratings is a relative ratings. In the US S&P, their benchmark is US AAA. CARICRIS, our benchmark is Trinidad. So everything is going to be relative to Trinidad. So yes, we don't expect a single A CARICRIS ratings to be a single A S&P or Moody's, no. But in our context, because we don't live in the US, we live in the Caribbean business doing Caribbean stuff. And we have a rating scale that basically harmonized so that pension funds don't have to argue whether or not a bond issued by a manufacturing company is the same as a bond issued by a bank. The rating agency basically harmonized, so you don't have to worry about which industry or which a single A is a single A. So if you're in the market for single A, these are the single A options, unless there are other limits as it relates to sector, etc. So you're right, Carl. I think we need to and I think rating is one way of kickstarting the secondary trading, which Sarah mentioned earlier. If we want to get to the place where we have a robust secondary market, then rating of instrument is going to play a key role, because we know in the US, all of the bonds that are traded, even before they have the settlement, they are rating instruments, you know. Yeah, Sarah, I look like you're itching to come in, man.
No, because Carl said it all. I mean, that's what I was saying, is that I do find, you know, from a process, it's complementary, but it's not the be all and end all. You know, it's going to take some while for it to become something that, you know, the investment managers see as credible and reliable. You know, also I think in terms of how, you know, we've resourced teams, right? Most of the team, asset management teams or capital markets teams, we have our own research units. We have analysts on our teams. And so, you know, they have to they have to do work as well. So I find that there is a bit of duplication, but it's certainly complementary. You know, I think for certain institutions that I've worked with, you know, they have their own rating process, right? Certainly, as I mentioned, for deposit taking institutions where I'm seeing the bank be more accommodative of participating in bonds. From a policy perspective, they haven't reached a point where it's carry Chris, you know, they would prefer to run it through their own established rating methodology and assign, you know, the bank's rating methodology takes precedence, right? So it may, as I said, check a box for, yes, I can invest in this, but in terms of what's acknowledged in the institution as a rating may be the institution's own rating methodology.
Okay. Okay.
And also, the
Right.
FSC does not expect the rating to replace the investment manager analysis of the investment. So it's complementary, and we expect the trustees of the pension funds to do their analysis, the CIS investment manager, to ensure that this particular asset satisfies the requirement of the SIP and the fund, the purpose for which the fund was established. So we also expect the analysis to be done by the fund managers prior to investing the assets or the funds or the assets, monies of the fund.
Okay, Damien, I'll give you the final question.
Replace the assessment of the credit of the institutional by the institutional investors.
Okay, no, well said, Karine. Damien, I'll give you the final.
Hi, Greg.
Yes.
I believe there's actually 2 questions in the chat from before Damien.
Go ahead and read those, Karen. You can go ahead and read those.
That's April. April, you can go ahead.
Okay, no problem. So the first one is from Kevin Walters. We have seen a couple big PPP transactions in the Jamaican market recently. So he's asking, what are the panelists' thoughts around the potential scope for more of these transactions locally and regionally? That's the first question.
And I think you're going to continue to see more of those. The Jamaican government has been very transparent that it intends to do more of those type of transactions. So what I would say is look out. I'm sure you're going to see more of those in the coming months.
Okay, Karen, you can the next question.
And the next question is by Monique. Oh, sorry, Monique, you were actually first, my apologies. Monique French, are capital market players doing enough to train their human resources? For example, funding CFA candidates and deliberately encouraging them to participate in the exams, so that they are able to evolve and raise the bar in the capital market space, especially if Jamaica wants to become their regional leader in capital markets.
Well, panelists, and I think Karine should chime in here. She's a charter holder at the FSC, so maybe she can put some pressure, you know, give some incentives for companies to get their practitioners becoming charter holders. Over to you guys. Who wants to go first?
Well, I don't want to have the show, but you know, let me just say, I mean, at GMMB, that's something that we definitely encourage. And so we have quite a number of candidates that are sitting these exams. And we definitely encourage persons so to do. We have a number of charter holders, as you would know. So we encourage persons to become CFA charter holders. And you know, we do fund them as well.
At the FSC, I think the CFA designation is an accepted qualification for a dealer representative. So I think the FSC would have done its part already as relates to that.
And Sarah, I know Scotia is a big advocate for CFA charter holders and a whole, so.
Yeah, absolutely. But I think, second to that, when we think about raising the bar, I mean, you take a multinational like Scotia and, the value add for staff member is the opportunity to leverage our global expertise. So, I mean, very often I can say that I certainly in terms of understanding new structures or solutions or best practices or approaches to, the rating process. I have a team in New York that I can liaise with. I mean, certainly from, you mentioned things like PPPs, which we see a lot in the infrastructure space. I have a lot of connectivity with a infrastructure sector team. So I do think, beyond the professional designation, depending on the financial institution and if it's, if it has multinational or a global reach, there's that opportunity for sort of cross-fertilization of best practices that I've certainly found very enriching in terms of, raising my understanding of the capital markets.
Okay, good stuff. And so, Damien, you'll have the honor of the final question before we wrap up this segment. And just a reminder to persons not to just log off. There's a final poll that will come up immediately after we close out this segment. So just stay on for another 2 minutes when we are through to complete the poll. Damien, over to you.
Thank you, Chair. I think it's a combination of the statement Madam Blair made about fiduciary responsibilities. If we're going to evolve as a capital markets destination and the improvement in the infrastructure, structures, and wide accessibility, is there any perception of what needs to be done on the buy side, whether it is in terms of adjustments to or expectations around fiduciary responsibilities and acceptance of the inevitable losses that will occur in our widely diversified portfolio, and the human resources development, even as we start to incorporate external ratings more in our framework. So I'm not sure if there's a strong perspective on that that Karine would like to add to, or any of the other participants in terms of their experience Carl spoke to in terms of getting evaluations of offers.
Karine, I think he put you on the spot there.
I think I missed the first part of his question. Whether or not we have the capacity to the investors are sophisticated to absorb and understand the potential losses that come from holding a diverse portfolio of instruments.
I was speaking in terms of the broad fact of diversifying from our history of government bonds into a much wider selection of instruments. And even with our well-diversified portfolio, you would expect that you would have challenges with some assets from time to time, while in the past you simply held mostly government or quasi-government bonds. And in terms of the stance around fiduciary responsibilities for those on the buy side, and the kind of capabilities that are expected of them.
Right. So as a part of the conduct guidelines that were published 2020, or the importance around fiduciary is really about ensuring that the licensee fully assess the investor's appetite, risk preference, where the investor would have received the instrument, the right instrument, based on their risk, that risk assessment. We want to see them evidence that there are policies and procedures around that, and it was done. It's about the conduct and the selling practices of the dealers. And I believe that once And for us as a securities regulator, we cannot, for us to regulate away the risks associated with a particular instrument. But the focus is ensuring that you provide the investor with the adequate information, and you would have done the suitability assessment for the investor as well.
Okay. Anyone?
And to ensure that your team is appropriately trained as well. And to know the necessary know your customer requirements was done. The updating the investor on a timely basis, notifying the investor of the asset in his portfolio, ensuring that you have current addresses and so on of your investor. Those are the operational and the conduct issues that we have been focusing on as the suite of, or the investment options have been, the new investment options have been made available to investors as well. Because I think sometimes our industry players focus on only informing the investors about the return or the income, and not about the risks associated with the asset.
Okay, thank you very much, Karine, for that. I'm not sure if anyone of the panelists want to add. We are running late, and so I'll just take the opportunity here to thank everybody for participating in this capital markets webinar, to our esteemed panelists, Sarah, Dylan, Carl, and our keynote speaker, Karine. Thank you very much. And to our participant who take the time out to come and hear what are the latest developments, some of the issues that we need to focus on to move our capital markets to the next level. There are some good points made here where Jamaica is poised to be the hub of our capital markets, where harmonization is something that should happen in the near future. And of course, the good work the FSC is doing in relaxing the regulation for pension fund to increase their asset allocation and to venture into spaces that they don't normally invest in, as well as a relaxation on US dollar investments. But there's still a lot of work to be done, especially in the secondary market trading side. We still are a bit manual. We need some price discovery, as pointed out by Sarah. Dylan mentioned his vision for us to be the hub, which is something that I think we should seriously consider, as well as Carl give his views around where we are and where we should go, and some of the good works the FSC has done. And of course, thank you again, Madam Keynote Speaker, for sharing with us the new developments the FSC is doing and some of the stuff we should look forward to. Thank you very much. And before you run off, the survey will come up any minute now. It will take you a minute or less to complete. And we look forward to seeing you at our next CFA Society Jamaica webinar, where we discuss trending topics and burning issues in the capital markets. Even though we are local, but we bring international speakers to these type of forums, and we discuss international issues affecting our market. So thank you again for participating, and to my esteemed panelists, we thank you again on behalf of the CFA Society Jamaica. Good night, ladies and gentlemen, but don't leave yet. Remember the poll, okay? And guys, if you know each other, you can big up each other before you go, you know. So Stanley, big up yourself. Good to see you, April, yeah? We're going to call about some deals tomorrow, right? And Karine, or yourself, I said enough deals for you to register, right? APO, IPO, bond deals.
And what do you think about FSC charging some fees on deals? No fees to register.
Yeah. Yep.
Sir Greg, yield up.
Who is
Kareem
that?
here.
Ah, yes, sir. Manners and respect to you, sir.